Hello, hello.
Hi.
Ruben. How
Hey,
you doing?
good.
So today we're going to be talking about investing in sectors. There's different sectors of the market. So we have the technology sector co- that includes consumer electronics, semiconductors, software and infrastructure. Of course, software and applications like your Ubers, consumer electronics like your Apples, software because Microsoft is a software, semiconductors as like chips, and fun fact about the semiconductors, they're related. The CEOs are actually related to each other. So the reason why semiconductor chips went up in value so much, or they're going up in value so much, is because they've kind of cornered the market on semiconductor chips. Can any one of you tell me what uses semiconductor chips?
Um,
No, I have no idea what that is.
So your TVs, your PlayStations, your um, what is it? Your computers, all of that, your laptops, they all use semiconductor chips, and that's the reason why I think um, Zoe, I think you have a graphics card from NVIDIA, and this is NVIDIA right here. This is NVIDIA right here. Um, I think you have a graphics card from NVIDIA. And NVIDIA is actually doing really well. If I click on this, as you can see, semiconductor chips are, like I said, AMD and NVIDIA have kind of cornered the market on semiconductor chips. So they've been doing well. They're up 16%. I think that's just on the day. Is that on the day? They've been exploding. Not 16%, but 16 points on the day, which is 3%. However, last week I know it exploded. So this is over. This is actually a weekly. Let's go back to daily, and over the last one, two, three, four, five, 6 days, it's gone up over $60, which is well over 10%. So if you were to put $100 in there, you would have made $10 back, which is a good return for a short amount of time. So this is your technology sector. This is one of those sectors that that's been growing over the last 20 years. This is what we've given. This is what moves the market the most, I would say, along with communication services, because you got Amazon and you got Google right here. But we consider those tech stocks also. I do. I consider Tesla a tech stock, although it's not within the tech um, infrastructure of the markets. You got healthcare. Healthcare, it kind of moves together, but a lot of people make a lot of money in healthcare, but you have to be in the know. And a lot of people aren't going to be in the know just sitting on the sidelines. You got consumer defense, that's your Walmarts, that's your Coca-Colas, that's your Procter and Gamble, that's your Costco's, your Targets, your Dollar Generals. Um, so those are consumer defense. Those are staples in the community, the places where you go to. So K. Rogers should be around here somewhere. K. Rogers, Kroger. Then another one, which America really doesn't typically control is the oil and gas commodities. So you got Exxon Mobil, got real estate. You got, I think Zoe, you said you want to do real estate. Got your real estate money.
Yeah.
So is I back up?
I
Uh,
can't see you.
You can't see? Okay, well,
No, I'm gonna have to do it on my computer next time so I can actually see the screen.
let me see. Let me see. Let me see if I can maximize it for you. That's too much. Back on up. Let me see. Can you see now?
Mm.
Okay. So,
Okay.
um, the stock market often is divided into different sectors representing specific areas of the economy, such as technology, healthcare, finance, consumer goods, energy, and utilities. Each sector has its unique characteristics and growth prospects. So, when you're looking at this, what do you see, Zoe? When you're looking at this, what do you see?
Colors
Okay, what are the colors?
have like a color code.
What are the colors? What are the general colors that you see?
Shades
Red.
of like green and red.
Green and red. So if it's really red, that means it did really bad today.
Oh.
If it's really green, that means it did really well today. So green is good, red is bad. If it's a little bit of red, so if it's like maroon, then it did all right. Well, it didn't do all right. It kind of lost a little money, but it didn't lose a lot of money. See, it almost lost 1%, which isn't bad. If it's dark green, that means it made a little bit of money. And if it's just solid like this, that means it was just in the middle. It really didn't lose anything. It didn't make anything. So those are your staples. Can somebody tell me what the different markets are? What the different sectors are?
Um.
They're up top.
Technology, communicator, consumer,
Communication services,
consumer,
consumer defense.
and healthcare.
Yeah, you got consumer cyclical. You got the financials. So, I work in the financial space. So you got your Wells Fargo's, your Berkshire Hathaways, your JP Morgans, your Visas. So you got the Visa card in your pocket, your American Express, your MasterCard, your Citigroups. What else? What else? CME, you wouldn't know that. S&P Global, you wouldn't know that either.
Hmm.
You got your utilities. So the way that you pay your energy bills. You got solar power. No, that's Southern Company. That's actually the company that runs Georgia, Mississippi, Alabama Power. So it's all one company. You got your Exxon Mobil's for your gas and your basic materials and your industrials. So industrials is like, you know, wood logging and stuff like that. General Electric. Lockheed Martin, Boeing. Okay, so that's all I was wanting to tell you about, your industrials. That way you can keep an eye on it. When you start to invest in the markets, the different sectors of the markets, sometimes the different sectors of the markets outperform with each other. So if technology stocks are doing really well, then if one technology stock is doing well, other technology stock is maybe doing well. So you always want to look for the laggards within um, certain sectors. So,
Lag?
like I was telling you, laggards.
Yeah, what's that?
So when Nvidia, I just told you, Nvidia and AMD, they basically do the same thing. They make computer chips. So when AMD is doing well, Nvidia should be doing well. If AMD is lagging behind Nvidia, let me see. AMD was at one point in time under $100. I remember when AMD was under $100, um, and it was right here. It was struggling with $100. Then Nvidia started going crazy, so AMD said, "Okay, I got to get my stuff together to go crazy with it." So eh, AMD is kind of a laggard, but Nvidia is a rock star. So if you got a rock star and you got a laggard behind it, a lagging stock behind it, then most of the time it's going to hitch itself to the rock star and go crazy with it. So semiconductors, like you see Broadcom, which produces chips also. Where is Intel at? Intel, I don't know if they're on here because they're not producing chips at the capacity that AMD and Nvidia are doing. So you when you go to Intel, you want to get you a what a what do they have? They have the i7s and the i5s and the i3s. However, it pales in comparison to what AMD and Nvidia are doing right now. So, I mean, you can choose to invest in it and say that I think that Intel is going to go up, and it may. Look, it is going up if you look at it. It has kind of the same trend that AMD has. However, it's not going up at a substantial rate like AMD.
What?
But that's actually pretty good. That's a pretty good buy. So if you bought at 32, and let's say you bought 1,000 shares, so you got $32,000 that you came out of pocket, and then you sold at 47,000. Well, you sold at 47. That's from November to here, you've made roughly $15,000 just off of $32,000. That's almost a 50% raise in income. That's pretty good for the amount of time that you have invested in. Look at Mari. Okay, Mari back. What's going on, big dog?
What's up?
You've been listening to the lesson. You sound like you've been asleep.
Yeah, I was.
Okay.
I had
So I was
schedule. I forgot I had to join.
Yeah, no worries. So I was showing them Intel. Oh, y'all weren't even looking at the thing that I was looking at. Lord have mercy. Okay,
A
let me
and D.
AMD and Nvidia. You know about AMD and Nvidia because they got the good graphics cards, right? Everybody, when you get a PC, everybody wants to get a Nvidia graphics card. So what I was telling them is when AMD, when Nvidia is going up, because if you look right now, let me change the screen. Wait a minute. Yeah, I can just do it on this. So Nvidia over the last 1, 2, 3, 4, 5, 6, 7, 8. nine. 9 days, over the last 9 days, has gone up almost $100. That's well over 10%, well over, probably over, it's almost 20%. So it's gone up almost over 20% in the last 9 days. Now, I was telling them if you have certain things like NVIDIA produces chips or graphics cards and different things of that sort. And I was telling them that AMD does the same thing. So when you have a company that's a rock star like AMD that's in the same sector, usually those stocks are going to run hand in hand. So if you miss the move on the on Nvidia, you can always jump into AMD. And if you look at AMD over the last 9 days, one, two, three, four, five, six, seven, 8, 9. So in the last 9 days, it's gone up. What is this? That's roughly, that's almost over $20. Well, that is over $20. It's $25. So it's went up $25 in the last, 9 days. And then if you look at Intel, because Intel produces chips also. What does Intel produce?
Chips.
Can you tell me what they produce? They're all on your computer. You see it when you open up your computer. It says Pentium inside, Pentium 2 processor, or i7 or i3, or those are those are those are chips for certain computers. Now, over the last 9 days, it's actually went down. But if you invested into Intel when because it was actually cheap, $32 isn't that bad for a stock. So being this cheap, you can actually buy in a lot and leverage yourself into it. So if you spend $32,000, and I know that you don't have that. However, I'm going to show you how. I'm not going to tell you about leverage because I don't want you to use leverage at this point. But if you continuously invest, say for instance you had $1,000, but if you bought 1,000 shares at $32, which is $32,000, and it went up to $47, which would net you $47,000, um, you would have probably made 50%. So this is a 50% increase. Although it doesn't look like it, from 32 to 47, that's $15. Now at 32, it's not quite at 30, which would be fifth, which would be half would be 15, but um it's right at at that point where you would have made some money. So you would have made half of your money from that. So if you would have invested $1,000 and it went up $15, you would have made half of your money back from the amount you invested. So if you invested 32,000, you would have made 15 extra $1,000 back. And that's why investing is so crucial and so important, because just from November to now, imagine making half of your money. That's a lot of money to make, especially if you have a lot of money invested in it. So that's the thing with lagging and leading indicators. And we can go back to the groups. And here you can see, sorry, it's giving me a damn commercial. Here you can see the 1 day performance of the stocks. So technology actually was doing good today. Although the markets was down today, technology still knocked it out the park today. And that's being led by what other stock than Nvidia? The 3 month performance, technology is up. Real estate is very up, is really up. And the financial sector is really up. So that's just something to gain insight on. Although, like I said, it may be boring material. It's something to gain insight on to try to make some money from it. Let me hear something. I want to hear some. I want to hear some feedback. I'm putting the website in the chat too. Let me hear some feedback.
So
What
you
all do
would
you
just
want to know?
pick you
Go
would
ahead.
just pick where to put your money based off of how like these charts look.
Yeah, we're gonna get into the charts. We it, it's a holistic understanding. You can't boil it down to one thing because based on this chart, I could say, well, I think the market is going to go up. However, the holistic understanding is that okay, what is the trend for this month? What is it? What is the usual trend for the month of January?
So it would just change every month.
It change. Sometimes it changes every month. The so-called January effect is a market theory holding the January frequently sees regular gains for the month. So usually it sees regular gains. It's not good nor bad. January is a month that is closely watched by many analysts to predict the year ahead in the stock market. They call it the January barometer. And now some people use the first day, some people use the whole month. Yeah, here it is, January barometer. See, I know what I'm talking about. See, I wasn't even looking at it, but it's called the January effect or January barometer. So they use the first day or first 5 days trend to see how the whole year is going to go. Now, I think that this year is going to be significantly better than the last 2 years because the last 2 years was terrible as far as investing goes. However, being on the in the know side of things, you could have really made a lot of money. So if you were to buy, and I'm going to teach you guys how to make this significant amount of money without having to invest all the time.
What just happened?
What happened? My phone with that.
Wait a minute, I have to bring it back up. Here it is. So they call it. What are you smiling about, Zaya? Big old smile. Y'all silly. I ended the whole stream, didn't it? um, Mari, don't be laughing. Okay. So looking at it, uh, let me go to the Dow Jones. So these are your regular markets. This is what people are looking about and talking about. The market is down today. So you got the Dow Jones, which is 30 stocks. You got the Nasdaq, which consists of technology stocks. and you got the S&P 500, which I talked about yesterday. So if I go to the SPY, which is the S&P 500 Spider or the ETF, and I go here, and if you would have caught the S&P 500 down here in November and ran it up here, you would have made a lot of money. See, the rule of thumb in investing is to buy low and sell high. So when you buy low, you can optimize your positioning for anything. It's kind of like manipulating certain things. So Zaya, if you bought acrylic powder for the low from China, you can resell it over here for as much money as you can. It's the same way in the markets. It's all arbitrage. You just have to wait for the moment to come in order for you to have the best opportunity. And to get the best thing about it is you have nothing but life in front of you. So if you catch a few swings, you can turn $1,000 into you catch a few swings in the market. You can turn $1,000 into an over leveraged $10,000. And Mari, that's what you said you wanted by the end of the year. So you can definitely make that out. And we'll be talking about like how you can over leverage and um, in a few. We won't be talking about that now, but I really want you guys to gain an understanding from your own perspectives and gaining an understanding just with these common models or will help you go forward to to not only understand investing but to understand how to do business in the future. It's all economics. So you buy low here, and then you come up and you sell at the maximum amount of profit that you can sell at. Now, there's gonna come a time when you're gonna buy and then you're gonna sell too quick, and then you're gonna kick yourself. Don't kick yourself. You made the money that you wanted to make. Um, and if you do make money, which is that's good. And some people are gonna buy right here, and it's gonna come down here. You're gonna be like your gut is gonna be wrenching because you're losing money. However, it's just gonna pop back up, and you're gonna kick yourself because you got out too early. Okay, I see y'all
Mhm.
yawning. I know that we got to get into bed. I know that it's a school day tomorrow, so that's what I'm gonna leave you guys with. Um, anybody else have any more questions? Zaya, any questions?
Um, no.
What did ETF mean?
Um, each ETF means exchange traded fund. Let me make sure. Yep, exchange traded fund.
Surprise.
So ETF means exchange traded fund. So if you notice that the S&P 500, like all of these have their own exchange traded fund. That means you can invest directly into the market. So if you want to just invest in what you think the market is going to do, you invest in the SPY. For the Dow, you invest in the DIA. For the NASDAQ, you invest in the QQQ. Okay.
Mm.
And a lot of people invest in those stocks because they have a lot of liquidity. But we'll talk about that later. you wouldn't understand that. Y'all mere mortal minds it has a lot to expand on. All right, guys, that's all I have for you.
Okay.
All right.
All right,
All right, man. Have a good night.
signing out. Have a good night.